Actually, I started working with OYO even before I formally joined because there was no time. And Ritesh said the moment we shook hands, he said, "आपका time शुरू हो गया. अब मुझे नहीं पता आपका notice period है या क्या है, whatever, right? As far as I'm concerned, you are the CFO. You go and figure out क्या क्या करना है." So I actually had to go to the office and print my own offer letter because there was no HR. It's not that there has not been competition for OYO. One point of time, there were actually 24 companies that were trying to emulate what we were doing. We invested very heavily in capabilities much earlier and much deeper. So we were able to build deep moats and sort of develop technology, processes and cadence to make sure that every asset that comes on OYO platform, every hotel, every home that comes on OYO's platform, within 90 to 120 days, their revenues double.
Good afternoon, everyone. We have here with us Abhishek Gupta, Group CFO of OYO. Abhishek has been a part of OYO's executive leadership team since 2015, driving the overall strategy, financial oversight, long-term planning, and execution of OYO Group across multiple geographies and business segments, including India, Southeast Asia, Europe, and the US. He has more than 18 years of professional experience in key senior finance roles at leading organizations such as General Electric, Philips, and has worked in multiple industries including energy, healthcare, consumer products, and financial services before moving to the new technology startup. Abhishek is a merit holder chartered accountant and an MBA from Indian School of Business, Hyderabad. He also attended an executive management program at Harvard University. He was recently named the CII CFO of the Year in year 2022 in the consumer services category and was also adjudged the business world's most promising CFO of the year 2022. Abhishek is an avid traveler, a struggling golfer, and a proud father of 7-year-old.
हो गया?
Yes, so please have a seat.
Who are you? अपना
I am
बता.
Ashish Bhateja.
You're Ashish. How long did you work at OYO?
6 months.
So this is rigged, right? This is rigged. Thank you. No, thank you so much for having me here. It's a pleasure. Pratham showed me around the campus. Beautiful campus, yeah? What do you guys think? Or cyber ab itni paas mein, you can always sneak out.
I think we do that all the time.
You do that. Okay. No, it's a pleasure. It's a pleasure. Thank you so much for having me.
Pleasure is ours, sir. So I'd like to start the round of questioning with you, the
Okay.
fireside chat. It
Fireside.
won't be a lot fiery, but we'll still start. So
Sure.
first, I'll ask you some things about your overall journey.
Yeah.
What inspired you to pursue your career in finance, and how did your journey look like from a fresher to a group CFO at OYO?
So I'm the black sheep in the family. I hail from Ludhiana, and I come from a family of doctors. My dad is a surgeon, and my mom is a pediatrician. My brother is a surgeon too. So I actually joined pre-medical and joined Akash Academy. I came to Delhi, joined Akash Academy, and I thought it is too tough and not for me. So I went back to Ludhiana and I joined commerce. But kuch to karna padega. So then I thought that one of the fields in commerce which allows you to be self-employed was CA, and then I started doing CA. And the more I did CA, the more I thought that I need to do more. And I was fortunate to get placed in GE. That was the best thing I think that happened to me. So I was part of their global leadership program. So I worked across different businesses of GE, energy, healthcare, financial services, across the world, learning different businesses, working with senior level people, and getting a feel of what I like and what I sort of don't like. I took a break and I thought that I need to do more than accounting. So I also wanted to come back to India because I worked different parts of the world. So I came to India right after the financial crisis and went to ISB because I always wanted to do an MBA. But after ISB, I went back to GE because GE India was setting up a big P&L. So they had good opportunities available. Then I spent a couple of years at Philips in South Africa. While I was at Philips, this is being recorded, so I have to be careful what I say.
It is.
Okay. No, my wife used to work at Zomato, and I was working at Philips. So two diametrically sort of opposite companies. And she was always very, very passionate about what she was doing and what the company was doing, and she couldn't stop talking about it. And I was, exactly the opposite. I didn't care that much about what the company was doing. Because it was nothing wrong with the company. It was just a cultural mismatch versus what I wanted to do or should be doing versus what I was doing there. So anyways, then I got introduced to Ritesh by one of my ISB classmates who was working with Lightspeed Ventures at that point of time. And Ritesh was, I think, 21 at that point of time. And I was blown away. I was blown away when I met him. I met him like a few times. I met their board, I met their investors. And I felt that these guys are sort of building something which, if you are not a part of it, then you'll not be a part of it.
The
right?
FOMO factor kick in.
FOMO factor kicked in, right? And I thought, to be honest, right, finance guys are risk averse, right, in general. So I thought that what is the worst that will happen? Either the startup won't do well or I won't fit in. Either case, I can always go back to doing what I was doing. If not Philips, some other multinational, hopefully will still think that I'm worthy of getting hired, so I can still find a job. But we were a Series B company at that point of time, and actually I started working with OYO even before I formally joined, because there was no time. And Ritesh said, the moment we shook hands, he said, "आपका time शुरू हो गया, अब मुझे नहीं पता आपका notice period है या क्या है, whatever, right? So as far as I'm concerned, you are the CFO. You go and figure out क्या क्या करना है." So I actually had to go to the office and print my own offer letter because there was no HR. So there was junior person in HR. Our chief HR officer got hired later. So he said, I WhatsApped you whatever your comp is. Now you start coming, whatever. Right? So I actually went to office. I figured out who the HR person was. I said, "ये देखो मेरी बात हो गई है. आप मेरा चिट्ठी निकाल दो so that I can resign." And rest is sort of history.
This was when.
This is 2015. So this is my 8th year with OYO.
And this was when OYO was already at Series B.
We had just done Series B and we were doing diligence for Series C.
Okay.
Yeah.
So in OYO structure, I remember this from the time I worked at OYO as well. So there used to be bookings that used to come directly to the hotel also.
Yeah.
Some walk-ins.
Yeah.
And sometimes the customer would pay cash at the hotel.
Yeah.
Have you seen any change in the prepaid versus paying at hotel rate after the COVID?
I think there's a general secular trend towards digital payments, and that is a consistent trend across different markets. Not necessarily changed after COVID, but it fundamentally changed after demonetization, right? And after that, there has been one thing which has definitely changed is the cost of online payments has become cheaper.
Yeah.
With UPI and with all the things that the regulator has done. We used to pay about 2% on online payments. Now it is a few basis points, right? So that has really helped the bottom line.
So OYO is available in many countries across the world, across continents, across countries.
Yeah.
Do we see any difference in those digital payment structures or payment trends across countries or continents?
For sure. That is reflective of what each country's digital online offline mix is, right? For example, a country like Malaysia is all digital, right? I think you were in Philippines. Philippines will also be more digital than India. Yeah. Indonesia is more like India, and Europe is not digital, but all credit card, right? So yeah, different countries are in different places in their journey. Indonesia is more like India, and some other countries are a little further ahead. But I think the seamlessness with which the Indian digital ecosystem has evolved is just unbelievable. We are a country that skipped the credit card. I would say, as a country, the entire credit card era, and straight away moved to digital payments, which is unbelievable.
The UPI washed it off completely.
Yeah, fantastic.
Let's move the gears and shift to some of the questions around fundraising.
Yeah.
I think that has been one of the most interesting areas of your job as well. So OYO has raised significant amount of funding over the years. Could you tell us more about the fundraising process and how you decide which investors to work with, and what your role as a CFO?
One of my core responsibilities is to make sure that the company is fully capitalized to meet its objectives. So when I joined, we were doing diligence for Series C. So in the last few years, now we are at Series F2. So we have raised multiple rounds of equity funding. And then we've also raised, we were the first company to raise a term loan debt in the US market. We raised $660 million of debt as well. So yeah, I mean, I think fundamentally people are looking at the same thing. There are different cycles of funding ecosystem. So right now you must be hearing all the things that, Fed is increasing rates, monetary policies are tightening, so money is expensive, right? The LIBOR, which was 25 bips 1.5 years ago, is now more than 5%, right? So what that means is that, when you do the valuation of a particular asset, valuation one-on-one, it is the present value of future cash flows. So the businesses or assets which are loss-making right now, but have future cash flows or terminal value from where the majority of the cash flows are going to come from. And therefore, when the interest rates increase, the discounting factor that you will put on the 5th year cash flows is a much bigger discount than what you will have on a near-term cash flows. And that's why when the interest rates rose, the valuation hit that happened for the pre-profit companies was much sharper than what it was for the cash flow positive companies. That being aside, investors will look at fundamental questions. They will look at, if you are pre-profit, then they will look at, does the business, is there a market, is there a team, is there a product market fit? Yes, you're not profitable at an aggregate level, but are there pockets where your assets are mature enough? Is there a micro market? Let's say, is Gurgaon your micro market? Are you profitable in Gurgaon? Can you replicate that in other markets? And then you demonstrate your ability to replicate that success across the world. And then you marry that with the market size and the team's execution ability. And then you sort of have a discussion around what this business can become. Raising debt is actually very different. Raising debt is more about downside protection. Raising equity is more about what this can become. And raising debt is about what this should not become, right? That is the difference, because the debt holders are more concerned about security. If the company does too well, debt holders don't gain out of it. They're only worried about, is the company going to be able to service it? But equity holders obviously want the upside. So it is a very different kind of selling depending on the investor. And also within equity also, there are different kinds of investors, as you guys know, right? There are, our first few series was with early stage investors like Sequoia, Lightspeed, who can take early stage bets, pre-profit. Some of them even take pre-revenue, some even pre-product bets, right? Versus a growth equity investor like SoftBank, where they want the business models to be more demonstrated. And then further down in the funding life cycle could be private equity investors, and then obviously public market and mutual funds investors who look at very different things, who look at cash flows and very different things. So, and within that also there could be sovereign wealth funds, there could be hedge funds, there could be long only mutual funds, there could be pensions. So each investor you have to sort of marry as to what their investment objectives are and how does your profile of the company and projections fit into what their investment thesis is. And that's where you sort of try and find a fit, and then at the end of the day, everything's a negotiation, right? Everything is a negotiation that depends on whether it's a buyer's market or seller's market, right? So, and that changes from market to market. 3 years ago, it was a seller's market, so you could, raise capital even if, there were some gaps in your business, and today it is a buyer's market where the investors will do diligence for 6 months and still say that, okay, I don't like this business because they have 6% that they can earn in treasuries. So then they are not pressed to put in equity. So it's a combination of your business, the opportunity, the team, and the macroeconomics of funding capital market scenario. Sorry, long answer maybe.
No, that was quite good. So there has always been a lot of competition in the consumer tech industry.
Yeah.
And what is it that made your pitch stand out to the investors? You have had a series of investors who have tried to come in, Lightspeed, SoftBank, for that matter.
Yeah, it's not that there has not been competition for OYO. There were, at one point of time, there were actually 24 companies that were trying to emulate what we were doing. But I think we invested very heavily in capabilities much earlier and much deeper than most of the people who were trying to emulate us. So we were able to build deep moats and sort of develop technology, processes, and cadence to make sure that every asset that comes on OYO platform, every hotel, every home that comes on OYO's platform, within 90 to 120 days, their revenues double, right? As long as we are demonstrating that religiously for every asset, even today on an average, within 90 days, the pre to post, like Pratham, I was just speaking to Pratham, he was saying that pre-masters to post-masters, the 4.5x increase in the salary, right? Is that the number that you were showing? 4.2? Yeah, so that is what the USP is, right? That we say lapta ki, like what is in it for me, right? The what is in it for me is very important, which is that pre-OYO to post-OYO, if my revenues grow 2x in 90 days, then there is a proposition that is difficult to displace. And then obviously when there is a street fight, we're also fierce competitors. You've probably seen that.
So let's go a little into the business model and think about the company's approach to hospitality and how it differs from other players in the market.
If the patrons or our suppliers are not actually hospitality professionals, right? They are businessmen, traders, manufacturers who had surplus cash flows, and they put in a 20-room, 30-room property, which was primarily meant for real estate yields, right? Because in India, residential yields are 2-3%, commercial yields are 5-6%. So they invested in these properties as for real estate returns. And the best way, people say that the safest place to hide on internet is on the second page of google.com, right? So if I'm an Abhishek residency, the best place to not find business is again on the second page of booking.com or make my trip. Nobody's going to find you. Don't worry, nobody's going to come to you, right? So what happens is that if I'm the owner of a 20-room property, which is unbranded, then no large chains are going to work with me because I don't fit their criteria. And the OTAs, online travel agents, and all of them are our partners, right? They can't fill a unbranded budget property because the consumer cannot differentiate. So what happens is that I, as the owner of this 20-room property, end up running my asset at 20% occupancy, which creates a vicious cycle that I cannot give better customer experience, I cannot manage the pricing, I have to work with 15 different OTAs, my channel costs are high, I have no technology, no pricing, no content, no photography, nothing, right? That's where we come in. We said, your job is to operate the hotel, rest everything we will manage, right? So you will become your exclusive revenue management partner. We will co-brand you as OYO Ashish Residency, and then we will put our operating system there, and we will drive the entire revenue for you. We will also do the pricing, right? So we are a unique platform, different than all the marketplaces. We don't hold inventory risk, but we are a closed marketplace, which means that our suppliers are exclusive to us. So we decide the pricing, we do the revenue management, we give the technology, we give the brand, and we do a revenue share arrangement with them.
Okay, so
how was your why are you asking me questions all the time? How was your experience? How long were you there? How was your experience?
So I was at OYO for around 5 to 6 months.
Yeah.
And my experience was wonderful till the time I was there.
और क्या बोलोगे?
No, it actually was. So, one thing that I really found interesting was because OYO was still in its starting up phase, I would still not call it a initial stage startup, but it was still in starting up phase. Things were not very structured.
Yeah.
But that provides you an opportunity to make the kind of changes you want to make.
Yeah.
That provides you the flexibility to work as an individual and contribute to the system as a whole.
Yeah.
And those are some things I was able to contribute in the Philippines automation of the reconciliation systems.
Yeah.
So I enjoyed my time there.
Yeah.
And I did some standardization of the agreements because agreements in the international markets were not standardized like India. So those were a few things that I did and I enjoyed doing that.
Yeah, I remember the first recon, actually, I sat with the tech engineer and I said that I will keep writing the recon code in Excel and you please keep coding it, right? So we actually sat one night and wrote the entire recon. So that's how it, but yeah, we didn't do it for international markets, so that's why you had to do it.
I think I did a fine job at it.
It's still, we'll see. There are some tax notices.
In fact, I was the one who tried to, take precautionary measures so that doesn't happen.
Thank you. We appreciate your efforts.
That is one of the points in my resume you'll see.
Thank you.
So I'll bring some questions to the scaling techniques that OYO used.
Yeah.
So what are some of the biggest challenges OYO faced while scaling the business, and how did you guys overcome it? It's a little broad.
Yeah, I think the challenge for scaling is balancing three things. And that's, I'll just give a generic answer maybe first. Scale, customer experience, and economics, right? These are I would say broadly, these customer and partner experience, I will say scale is what you want to do, right? But the two guardrails that you have to ensure is, the experience of the stakeholders. It could be guests, it could be patrons, it could be whoever your stakeholders are, students, and then economics, right? You can burn a lot of money, scale a lot, you can give good experience, but then, you can end up like WeWork. Great customer experience, good scale, but economics get hurt, right? You can do a lot of scale, be very tight on economics, but then at the speed at which you're scaling, can you manage the customer experience and can you manage the guest experience? Or you can decide that I will run a very, very tight ship. I will make sure every customer is happy. On every transaction, I will make 30% margin. Then can you scale fast enough, right? So do you want to be the 100% of a $100 company, or do you want to be 50% of a $1,000 company? That is sort of the question, right? And it's not an easy answer. We struggled. We made our mistakes. What we would do is and it's very difficult to do all three at the same time. We realized that it's very, very difficult to do all three at the same time. So we would do spurts. We would run very fast for 6 months. Then we'll see what all has broken. And then we'll take a 2 months break and fix all of that. So we'll do this, then this, but still we are higher here. Then we will start spurting again, all right? And that's how, I think it will always go like this, because if you go slow, then it is not exciting, right? So we would go fast, then we'll break stuff, then we'll fix it, then we'll grow fast. That, by the way, can only happen when you're small. If you are already big, like today I don't do that. Because if you're already big, then the cost of that pullback on the full scale and network is too high. So then you have to have a flywheel, then that is constantly working, constantly churning. So in the beginning, when you are trying to do hyperscale, you go like this. But then when you are already at this level, then you have to figure out that how do you compound market share. So we used, we tried different things. We opened markets, we closed some markets, we gave some MGs, we tried different models. There's a lot of hustle involved.
So have there been, like you said, you closed some markets. On deep diving, did you find any key reasons as to why you couldn't break into that market? I think Vietnam was one.
Yeah, I mean, look, I think COVID, again, was a great, from a CFO's lens, I would, if we leave aside the human cost of it, because people lost lives and their near and dear ones, I would say that gave us an opportunity to really, really introspect, right? We did reflection sessions. We did, as a management team, we got together and said that let's be honest to each other, what all were we doing wrong? The reality is that we had opened too many fronts at the same time, right? And then we said, okay, let's define on what dimensions, like, you have this, whatever, BCG matrix, or where you define the portfolio. We said that what are the markets in which we will have number one, number two supply market share, where we will have strong direct demand, which means that the supply market share means that the hotel owners and patrons like us. Direct demand means that the guests like us. And third is our economics, is our contribution profit is more than 10%. At that point of time, we put 10% as that hurdle. And that the markets that did not meet any of these three criteria, that we said, okay, let's put these on a back burner. And the markets like India, Indonesia, Malaysia, and our European vacation homes business, which sort of were number one, number two positions, more than 50% direct demand, more than 15% actually contribution margin, they became in this axis, which are our growth markets, and rest are sort of what I would call as the future markets. It doesn't mean that they don't have the product market fit. It just means that the gestation period for those markets to mature, the capital required, the resources we have, the priority order is different, and therefore first we'll make money here, and then if needed, these category one markets, let's call them, were deep enough. We were single digit market share in all of those, and they're still very, very large, very, very deep markets. You could build very large business just from these markets alone. And therefore we said, okay, these markets, we will come back and invest later. We have to make sure that they don't lose money, but we will not put large dollars behind these markets. And then once now we are profitable at a group level, and the core markets are making a lot of money, then we have started now doing more measured investments in some of the future markets.
So I think what you mentioned was opening too many fronts. I think the question that...
It's about the speed, right? If you are given, in economics, yes, in the long term, we're all dead, right? So if you have enough time, then you can grow to whatever level if your product and market works. The question is that, what is the time frame in which you want to do it?
How much speed is too much speed?
I mean, yeah, so it is a question on, sometimes when capital is available, right, and you want to grow fast, you miss the hygiene part of it. So one of the three things break. In some markets, customer experience starts breaking. In some markets, economics starts breaking. So you're getting the scale, but you're not getting one of the two, and that is bound to break. And the reality, the point is that we did our own thing wrong, that we didn't pause enough to fix, and we kept scaling in some markets. So that is the mistake that we did. We had the formula, but we didn't apply it that well.
So what are the most revenue contributing markets except India, and most profit contributing markets?
So we are a single segment reporting, so I'm not going to give you segment level information, but in general I would say India, Indonesia, and European vacation homes, they together account for 90% of our storefronts, and they're also the most profitable markets for us. But each market standalone is break even or positive. So we are only investing at the corporate level in our technology, but there is no market which is burning cash for us.
I would like to bring the question around balancing growth and profitability again.
Yeah.
In the current environment, like now things have changed, COVID has gone, and people are vacationing again.
Yeah.
In the current environment in hospitality or in consumer tech sector,
yeah.
How do you think balancing growth versus profitability could play out?
So for us, the good point is that they are actually positively correlated. For us, growth and profitability are positively correlated. By that I mean that for every dollar of growth, 15% or 18% actually goes into my EBITDA. So the more I grow, the more profit I will generate. This question of trade-off comes in, maybe a little bit early stage companies where you have to induce to drive growth, either on the supply subsidies or on the demand subsidies. When you are subsidizing for growth, then this eternal question of growth versus profitability comes, and then that is driven by where capital is headed, depending on the market scenario. So right now, capital is all profitability, cash flow, that direction. When money is cheap, then capital is all towards growth. We have sort of seen that journey where we have done the growth, and now we have done the profitability, and now we just have to compound our profitability. So for us, we are sort of in a position where growth more growth means more profitability and not the other way around.
Okay, that was great. So before I open the stage for Q&As for everyone, I would like to ask you some questions around leadership. Now, you've been in leadership positions for a lot of years now, almost 18 years of experience, and leadership positions at GE, Philips, and OYO. What would be your advice or opinion on the three most important qualities for a leader to have, and how can one cultivate those qualities?
I'm not a sort of a leadership guru or expert, right? I don't know what those are, but I can just share some things that I've seen people do well. I've seen work for us. You could take it for what it's worth. I realized early on that I cannot be an expert in many fields. So I always tried to hire somebody who was better and smarter than me, right, in one or two things. And that really helped raise the quality of team. And then you hire people you have to be more sort of comfortable in your skin. You have to drop away your insecurities, and then you hire people who are smarter than you, better than you, and then you empower them, and then you give them air cover, right? Because if you want people to follow a book, then they will become like the end of that bookend, right? If you want people to try and punch above their weight, then for sure, one day or the other, they will get beat up, right? Because they will try and punch above their weight, and then they will get hit in the face. That's the only way and at that point of time, when they get hit on the face, how do you react to it is what defines the culture of the organization. If you want people to punch above your weight, you have to let them fail, and you have to back them when they fail. If you want everybody to follow the process, everything, then you will grow as per the process. So it depends on the organization. My I think endeavor has been to hire ahead of time more than what we need in terms of quality, to empower them, and then to give them air cover if they need the air cover, because they give me air cover, I give them air cover. It is a symbiotic relationship.